Okay, so you've heard the words flying around, right? Bitcoin, blockchain, crypto, they are absolutely everywhere. But what do they actually mean? Well, over the next few minutes, we're going to decode all that hype and really get to the bottom of what this technology is all about. Let's jump right in. And really, this is the big question, isn't it? Is this the next evolution of finance, or is it just a temporary craze? By the end of this, you'll have the basic tools you need to start forming your own opinion. So let's get into it. All right, first things first, we need a super clear definition. We're going to cut right through the confusing jargon and get to the heart of what we're even talking about here. At its absolute core, cryptocurrency is exactly what it sounds like, a digital form of money. The whole crypto part, that comes from cryptography, these incredibly complex codes that keep everything secure. So just think of it like money that only exists on computers, protected by some seriously tough digital locks. Now, this is where things get really interesting. The money you're used to, dollars, euros, whatever, is controlled by a central authority, a government or a big central bank. But cryptocurrency, it's decentralized. That means there's no single boss, there's no one company, no central server, no bank in charge of the whole thing. This is a huge deal, and it's what makes crypto fundamentally different. So you're probably thinking, okay, if there's no bank, how does anything actually work? How do we know transactions are legit? Well, it all comes down to a really revolutionary piece of technology. The magic ingredient here is something called the blockchain. The best way to think about it is like a giant shared digital receipt book that's copied across thousands and thousands of computers all over the world. Every single transaction is like a new entry in this book. And because everyone has a copy and all the new entries are cryptographically locked to the old ones, it's pretty much impossible to go back and secretly change something. You just can't cheat the system. So what does a transaction look like in practice? Let's walk through it. Say you want to send some crypto to a friend. First, you request the transaction. That request gets broadcast to this huge global network of computers. These computers then verify that you have the funds and that the transaction is valid. Once it's confirmed, your transaction gets bundled together with a bunch of others into a new block. And finally, that new block gets permanently chained onto the end of all the previous blocks. And boom, that's it. And that process right there is why so many people are excited about this. Because that digital receipt book, the blockchain, is public. Anyone can look at it. That makes it totally transparent. And because of all that complex math and coding we mentioned, it's basically tamper-proof. It's that combination that makes it so secure. Okay, so we've got the what and the how down. But why? Why has this whole thing exploded in popularity? What's the big draw that's pulling in everyone from regular folks to massive companies? One of the biggest ideas out there, especially when it comes to Bitcoin, the original crypto, is this idea of it being like digital gold. People see it as a place to store value, kind of like physical gold, but completely outside of the traditional banking and government systems. And that digital gold idea connects directly to this. You know how when governments print more money, the money in your pocket can become worth less? That's inflation. Well, the thinking here is that since some cryptocurrencies have a limited supply, they might hold their value better over time, acting as a shield or a hedge against that inflation. But it's not just about digital gold. Let's be real, a lot of people are drawn in by the potential for massive growth. Others use it to diversify their investments, not putting all their eggs in one basket. And for the tech-savvy crowd, it's a gateway to a whole new world of things like NFTs and decentralized finance, or DeFi. Oh, and plus, the market literally never closes. It's open for business 24/7, 365. Okay, now we have to pump the brakes for a second and talk about the other side of this. Because for all the excitement, there's one giant, flashing red light risk that you absolutely have to understand. This is crucial. And there it is, in one word, volatility. The prices of cryptocurrencies can swing up and down like a wild roller coaster. I'm not kidding. It is totally normal to see prices jump or crash by huge amounts in a single day. This is a high-risk, high-reward game, and it is definitely not for everyone. So this leads us to the single most important piece of advice you will ever hear about crypto. If you remember nothing else, remember this. Because the prices are so unpredictable, the golden rule from basically every financial expert is to never, ever invest more money than you would be okay with losing completely. Seriously. All right, let's wrap this up. We've covered a lot of ground, so let's just quickly recap the main things you should walk away with. This really sums it up nicely. On the one hand, you've got some powerful pros, huge growth potential, a new way to diversify, and some really cool, groundbreaking technology. But on the other side of the coin, you have some very serious cons, that extreme volatility, the need to do a ton of your own research, and just how unpredictable it all is. It is the very definition of a high-risk, high-reward situation. And just to really drive that digital gold idea home, check out this number. There will only ever be 21 million Bitcoin. That's it. The code is written so that no more can ever be created. This built-in scarcity is a key part of its design, and a huge reason why some believe it's a good long-term store value. So, there you have it. We've decoded the essentials, from the tech behind it to why people are interested and the massive risks involved. Is it the future? Is it a fad? Honestly, no one knows for sure. But now you've got the foundation to follow the conversation, do more research, and start figuring it out for yourself. What do you think comes next?